All right, gang. Happy Wednesday to you. Welcome back to the Tier 1 Trading New York live trading room. Let me know if you guys can hear the voice and see the screen here. Perfect. We had a busy day in the market yesterday. Some inflation numbers came out hotter than expected, opening the door for what the markets are calling now a potential jumbo boost when the U.S. has its interest rate decision next week. Yep, it should be next week, I believe. And now the market has kind of settled, right? So again, we're seeing a very fundamentally driven market. We got our big news event coming up soon. We're going to see these massive moves in anticipation of that, and then we're going to see kind of a settling until the market makes up its mind and gives us a little bit of a slow market day. But I do have a trade of the day, and as always, if you guys have anything that is on your radar that you want to check out, let me know. If you guys are watching on YouTube or TradingView on the live stream, welcome. This is called the trade of the day. What it does is it gives you a peek inside our Tier 1 trading live trading room, showing you the first pair or first asset, whatever we look at first, giving you some analysis. Sometimes we go on some pretty in-depth discussions. We had some really good discussions yesterday. It wasn't on the live stream, but man, yesterday was full of some big ones, some really good ones. But hopefully this gives you something that you can plug into on a daily basis that will help you along your path to becoming a consistently profitable trader or just a better trader in your trading journey. So for today's trade of the day, we're going to go to a pair that I typically don't look at too much. You guys know I tend to stay away from Swiss pairs. I showed you why yesterday. But we're going to go to the dollar Swiss, starting on the daily chart, because again, there's not a lot out there. And here on the daily, you can see a few things, right? You can see yesterday's jumble of mess, right? Spike down, spike ups, engulfing of the previous day, I believe, or close to it. We didn't quite engulf it, close at the highs. And now today, so far, we're putting in a little bit of a consolidation. We're also putting in an inside bar. So a few clues that we have, and this is the good part about being able to read a candlestick. You can kind of tell what this is before you even get a clearer view. So an inside bar, if you are familiar with an inside bar, let me know what type of signal or sign, what type of information does an inside bar tell you about the market, right? Before even going down to a lower time frame and seeing it, what does an inside bar tell you? Yep, an inside bar tells you consolidation. If you guys are new, an inside bar is going to be this most recent bar right here, this red one. It is a candlestick that completes, it's an inside bar so far, right? This can always change, but it is a candlestick that completes completely within the range of the previous candlestick. And the previous candlestick is often referred to as the mother bar, right? So we know that this little guy right here, this is also a doji. Daniel, gosh, come on, Daniel. It's too early for shouting. Sheesh. Come on. Turn that caps lock off. I've got young kids that are asleep. Well, one young kid that's asleep. Other one's hopefully in school right now. We'll see. That's always a chore. But we also know it's a doji candle. Now, what can we tell about the location of this inside bar? Does the location of this inside bar give us any information or any clues on what this may look like? And again, this is the brilliance of, I'm a believer in being able to read candlesticks, right? If you can read the small things, it allows you to read the big things. It just gives you more clarity. It's not necessary. I do think it's helpful. But you can see that this inside bar is forming what? At the top, bottom, middle of the range of the mother bar? What would you say? Top of the range. All right. So we put two and two together, right? So we know the mother bar was a bullish candle, right? At some point we started here, we spiked down there, we closed at the top. So at some point the move looked like this. We know we have consolidation at the top of the range, right? So what do you think this is going to look like as we go down to a lower time frame? Yeah, it's going to look like some type of flag pattern, right? So we don't know what type yet, just by this information. Could be high and tight, could be normal flag. In some cases, it may even be like a rising wedge or a rising channel, something like that. But we can tell by this information that because it's in this upper range, it's going to present this type of pattern. So we know that we could be on alert for some type of flag pattern. Really quick, I forgot who asked the question on Monday's Q&A. We're breaking down a trading plan. We talked about loss of momentum candles, loss of momentum in the trend. Here's another good example of that loss of momentum. I forgot who it was. I apologize. So many of you guys. Here's a good example of that loss of momentum. See the change in slope, guys? See how we have a very steep grade and then it gets less right here? That's a good example of a loss of momentum move. Very steep, and then it starts to kind of bend out a little bit. So just random here. So let's go down to a lower time frame here. Right. Overall, again, the Swissy, this is what we're doing on the Swissy. So it's been blah, right? But let's go down to a lower time frame, see if this gives us a clear look, right? Now we have a little bit more information as we go down to the lower time frame. So again, we're lawyers, we're detectives, we're private eyes in the market, right? What we're doing is we're in the business of gathering information, trying to form conclusions off the information if we can. We don't want to force it, right? If we don't have enough information to form a conclusion, it basically means no trade. But we want to gather information. We're going to form a conclusion off that information. And then if it meets the rules of our trading plan, we want to act on it. So we can see that we do have our consolidation. We were right. But what else do we have here? We also have a previous level of structure looking left. So it's kind of a double dip here, right? This is, I don't want to call it a high and tight flag, but just a consolidation, right? Because it is a little slanty. We can call it a normal flag pattern. This also is going to come at another level of consolidation. So it could potentially also be a very kind of thin, non-symmetrical shoulder of a head and shoulders. Now, again, going back to my theory on really any pattern formation in the market, it's not the pattern that is the most important thing. It's understanding what the pattern is. So we can debate all day whether this is a head and shoulders or not, right? If we polled half the people watching this, right, half of you would probably, or a third of you would probably say, oh yeah, head and shoulders, I can see that because you see those types. A third of you would say, nah, not a head and shoulders for me. Retracement isn't big enough on the right shoulder. And then a third of you would be like, I don't know, right? But here's the main question. What is the most important part of a head and shoulders as far as us making our trading decisions, as far as us judging the validity of it? That's usually a tough word for me. I went in confident and I nailed it. Validity. Usually I end up going, what's the validity? Validity. Is it valid or not? Right? Yeah. I'm trying to be confident with my words now, guys. I say it confidently, and even if I here's another one. Even if I mispronounce it, I didn't go into that one confidently. Even if I mispronounce it, at least I sound good. At least you think I know what I'm doing. But yeah, break of the neckline, correct, right? So this level right here is the main. We'd adjust that a little bit because of this wick, but that's the main point that matters. Whether this is a head and shoulders, whether it's not a head and shoulders, it's just structure. This is the main point that matters. So what we have setting up is a potential breakout pattern. Now, here's the next thing, right? We spoke about breakout trading yesterday, and it's funny. We were analyzing a breakout trade on the pound yen. This is trading, right? We're analyzing this breakout on the pound yen, and we looked at this level and we said this is pretty much a neutral breakout, right? Because we have a previous level, we had just broken and closed above a previous level of structure resistance, which is now acting as support. And if you look left at this level, we have a previous level of structure resistance still playing as resistance back here. And we had two different traders, right? I think we had, was it Daniel? Were you looking short? Was it Daniel was looking for a short breakout? And I think it was Cody looking for a long breakout. Well, look at that. Both of you guys, right? You got your short breakout here. You got your long breakout here. Both you guys lost. How about that? How about that? You were both wrong, or both right, maybe, depending on how it works out. But this is the market playing games. Look at this. The market said, you know what? I don't know who I want to be right or wrong this time, so I'm gonna fake break to the downside. And I don't know what order this came out in. Wasn't watching this live, but I remember we were trading down at this level. But I'm gonna fake break to the downside, and I'm gonna whip you up to the upside, and I'm gonna take you back down to the downside. I won because I stayed out of it. But these are the games we laugh at it because this is, if you're new to the market, this is every once in a while, especially on high impact news events, this is what you're going to get. This is why you always hear me say, I avoid high impact news events, especially the lower time frames you go. Not that the hourly is a lower time frame. Usually you don't see this too much on the lower time frame, or on the hourly, excuse me. But this is the whipsaw that you get anywhere under the hourly, and it's just best to stay out. And Cody says, "Yep, you did call 166s, Cody. Yep, Cody was right. It just happened all within 2 seconds." Another thing that you guys missed on the live stream, we're looking at the range bar charts during our inflation report, and we looked at this 200 pip move, and we found some opportunities to get involved. But it was funny because we got like 80 candles printed in a matter of like 16 seconds. It was ridiculous. We had a nice conversation about the reality of the trading versus unrealistic expectations. But going back to, what was I on, dollar Swiss here? So we have another scenario where we can look for a potential bullish breakout. Now, me personally, I like breakouts once they, for me, they have to be clear of structure. I'm not a breakout trader, so they have to be clear of structure. But this is another one where we can look for a potential trading opportunity. Honestly, either way, my bias would be to the upside just because of the general analysis of this. But either way, when you have consolidation areas like this, what I like to do is this. You bracket the bottom, you bracket the top. Again, I'm not a breakout trader, so I wait for confirmation, and then you take the trade in that direction, right? But of course, there's other ways you can load up prior to the break. So start accumulating your position in anticipation of a breakout, whether it's up or down, or you can, put like a sell stop underneath, a buy stop above, and wait for the breakout. Now, let's talk about targets upside or downside, right? So let's start with if we go bearish. So if we look for a bearish breakout, shoot me some digits here, guys. Where do you think we're likely to go? Real quick trading view. Hey, thanks for today's session. What are your thoughts on euro dollar and New Zealand dollar? Sorry about that. We only do one pair, and so we've already started, unfortunately. I can give you, I feel bad because I always do this. People that come in late, they ask for something. Do me a favor, give me a time frame, and I'll do a quick one for you. But I need a time frame because my opinion on euro dollar weekly is going to be different from euro dollar 5 minute. My opinion on pound New Zealand hourly is going to be different from pound New Zealand 4 hour. So give me a time frame that you want me to look at, and I'll give you a quick analysis. So I feel bad. I'm too nice of a guy. So do that, and then I'll give it to you. Real quick, while you guys are typing in digits, Toby says, when I encounter a long consolidation, 1 hour bar, I put a straddle on it. That's just me. Toby. We have Daniel yelling. This is a clean show, Toby. You leave your straddling for the night session. Sheesh. That's the Cody has this live room confused with the naked trading room. That's the night session, guys. Bow chicka wow wow. Naked trading room. Yep. No fibs, no indicators, no nothing. But do come dressed. It would be inappropriate if you do not come dressed. I don't know what you guys are thinking. Get your mind out the gutter. So, Daniel says 95.40s if we go lower. 95.40s right here. I'll change this to green. Boom, 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 95.40s. Bobby says 95.40s as well. No one ever answers my questions on TradingView. Do you guys come in? I don't understand how the live stream on TradingView works, but I feel like whenever I ask something, no one ever responds. I wonder if people are just dipping in and out. Bobby says 95.40s as well. Maybe bump up to 95.60. So a little safe level right here. Yeah, this would be the level I'd be looking for. You got a nice little mesh zone right here. Give me a second, guys. There we go. We got a response perfectly. Thank you so much. I'm just a beginner trying to learn through your sessions. I'm trying to do intraday. All right, I still need a time frame though, because I can't. I can't answer your question about my thoughts if I don't know what time frame you want me to look at. So you got to give me a time frame. I would do this if you're new. I don't want you to get overwhelmed or confused by what you're seeing here. I would. I mean, honestly, the best place you can go is to the website and jump into the actual live room. I want to forward you to YouTube, but I think YouTube may confuse you even more. Yeah, just give me a time frame, and I'll look at it and I'll do that. I don't want to seem like I'm shamelessly promoting something and be like, hey, come over to tier1trading.com and that's where you need to be. But like, that's the truth. So yeah, looking at this zone right here where you've got a little mesh point between, again, previous structure support right there, previous structure resistance right there. I think anywhere in this level is going to be good. If we have this decision to make, what is something we can bring in to potentially kind of give us some confluence? What do you guys think? By the way, if you guys are watching on the live stream, hit that like button. Show me some love, please. Yeah, let's use a Fibonacci retracement. Let's bring a Fib in. See if that clears things up. Should be a 618 in there, right? I would guess. So Fibonacci retracement. Swing high to swing low. Doesn't really help, right? We got a 50% right at the first mark. We got a 618 at the second mark. So, these are both two good levels. So I think it's going to depend on, it's all going to depend on what you bring more value to, right? Are you more conservative? Are you more aggressive? Do you value the 50 as much as the 618? The 618 is the golden mean, but we know the 50% is pretty relevant as well. So yeah, I would say 95 57s down to 95 37s is a good place. So now on the other hand, let's go to an upside break, right? If we break to the upside, shoot me some thoughts. Shoot me some thoughts. And we got 30 minutes to an hourly. Okay, I'll give you some hourly analysis. I'll give you a quick version of it, because I am a man of my word. But I will tell you this: if you really want to learn how to trade, you gotta dig in, right? I appreciate you watching all the live sessions, but just make a commitment in doing it. So that means, I'm not saying that I'm going to be the right teacher for you. Bounce around, find the right teacher. If I am the right teacher, commit yourself to us, because what we don't want you doing as a live trader, and we spoke about this in a coffee break episode, you don't want to bounce around to a lot of different educators, because we're all a little bit different, right? And that's not saying, some are better, some are worse, some are all good, some are all bad, right? But you're going to get, each time you go to a different educator, you're going to get a different philosophy on the market. And as a newer trader, that's going to confuse you, because now you're trying to do, excuse me, now you're trying to do 5 different things. Terminology may be different, approach may be different, and now you're wondering what's right, what's wrong. So the best thing you can do is, once you find an educator that you think like, hey, this is the person for me, this is the person I want to learn off of, commit to that educator, right? Dive into what they're teaching. Later on in life, after you become successful, then you can go back to the other ones, because they have different things you can learn. It's good to get different approaches. But definitely as a newer trader, you got to spend your time researching a few, commit to one, and then go in just like that. Go in just like that. Oliver says 9760s. It's 9760s right up here. Bobby says a bit more tricky with multiple levels. I'd say 97. 97's a little bit lower. 97's got anybody on YouTube saying anything? 97's as well from YouTube. Perfect. So here's what I would do with this one, right? We got a few things. One, we can take, and I want to hurry because we may break out soon. One, let's take a Fibonacci extension. Georgia beat me to it. From the flagpole, swing low to swing high, and back down. We're going to get a 127 and a 1618 up here. Those are our 2 main marks. We can also take another Fibonacci inversion here as well. Or excuse me, Fibonacci retracement. Had yesterday's trade on my mind. Fibonacci retracement from our swing high to swing low. Right here. We got a 50% with our 127. We got a 618 with our 1618. So we got good confluences between there. We can take an AB equal CD, a equal measure move, right? So an equal length breakout. This is more of a traditional way to do flag patterns, right? Where you look for either an equal measure breakout like that of the flagpole, or you do equal measure of the range. So equal measure breakout would be like that. Equal measure of the range would be taking the range of the flag, right? The range of this consolidation. And then looking for an equal measure break like this. Give me 1 second, gotta sneeze. Tell you, every time we go from hot to cold, it kills me, man. We've been going from like 90 degrees in the afternoon, like 30 degrees in the morning. Now, another thing we can use here, I hate it, is our volume profile, right? Because the first thing I did was I went to look for levels of structure and what levels of structure stood out. Let's take our volume profile from our high to our low. You're going to see something very interesting at where we're consolidating now, right? We are currently consolidating at the high volume level, right? No surprise here. We then see volume decrease, get a little bump right here as we would expect, decrease. Our next spike is right up in this structure level, right? This was the structure level that I personally chose, right? Even before looking at this, right? Just because this was the one that stood out for me. We have a little inside structure in here, but you guys know how I feel about inside versus outside structure, or recency bias in structure. This is going to be more important. Having this spike start right here gives me that location. So that location is going to start right at our 1618 and 618 Fibonacci retracements, or 618 Fibonacci retracement, 1618 Fibonacci extension. That's going to be right at 9708, right? Now the magic question, targets 9708, or should we, come on, type it in, I can't hold it forever. Thank you. Adjust, right? We should adjust right below, right? 9708 isn't a very smart number in my opinion. Now, if you don't care about psychological numbers, then you don't have to. I would urge you to go back and watch the day trading video I did last week that saved my bacon, literally saved my money from an even handle number of 50%. But I would not be greedy, and I would go a little bit under to, underneath the 97 even handle, right? You're giving up 10 pips, whoop-de-doo, right? You've given up 10 pips, whoop-de-doo. So I think this is a good area for the breakout here to the upside. That's analysis. If you're new, I've completely wrecked your mind. I apologize, but trust me, this stuff is easier said than done. It's confusing if you're new because it looks like we're doing a lot of random stuff and the speed is pretty quick. But trust me, when you have a process, you know exactly what you do. It's very similar to, I'm not the most handiest person in the world. I'm probably more on the scale of the least handiest, right? So the first time I do a project, I'm a wreck, right? Because I try to do it. I don't watch any videos. It's just, man ego, right? Amigo. And I'm just like, I'm going to do it. So I open up the toolkit and I just take out all the tools and I just start doing what I think is right. And I mess up because I'm doing stuff in the wrong order. And I should have done this before that. And, whatever. We've all been there, right? Man ego, just like driving somewhere and not looking at directions and getting lost and, whatever. And the wife yells at you, right? But once you do a project for the first time, once you understand how to do it and you do it for a second time, now you have a routine. You're like, okay, I need to take the hammer out. I need to do this. I need to screw that in first. I need to do this, do that. Boom, 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 boom. You're using each tool in a very specific way for a very specific job in a very specific order, and the job gets done correctly. And trading is the same way. So we're not just throwing on random stuff. And I think that's what most newer traders do. They see something fun on the internet, and they read something fun in a book, and they throw it on a chart, right? We're very intentional about what we're using, right? Nothing on this chart is a waste. I put out a podcast, I think a couple of days ago about, the title was, does it add value to your trading, right? Nothing on this is a waste, right? Is there a point of putting something on a chart that we don't actually use? No. So we just want to be efficient and intentional with what we use, and we know what we're using each thing for. We know exactly why we're using volume profile. We know exactly why we're drawing out Fibonacci retracements. We know exactly what we're using AB equals CD patterns for, right? Notice we didn't use an AB equals CD pattern to the downside, right? Because there was no purpose in doing that, only to the upside. So it seems like a bunch of junk in at the first place, but then it clears itself up. Okay, let me do some quick analysis. I promised, and I am a man of my word. I don't want the internet thinking I'm a liar, because if my kids see this video one day, then they'll think I'm a liar as well. But let's look at euro dollar hourly analysis. We'll make it real quick. So euro dollar, like many of the dollar pairs, fell off a cliff, right? They're like that little infographic thing of like sheep's jumping off a cliff and the rest of the sheep following. That's what happened. We started to base off at previous structure, looking left right here. Really, for any type of conviction in a continued move to the downside, we need to violate this level right here, and then even then we're limited to the downside. Now, again, bigger picture, higher time frame, I still think we can go to 96s. So I'm still really, really big on dollar shorts, like even bigger than before. But based on this time frame, this is why I say time frame matters. We would need that violation, excuse me, before we can push lower. Something that you can look for, and I'm not sure if we got it here. We did. Something that you can look for is a 2618 trade, right? So you can see we came down, we double bottomed, double bottom. If I get my tools on correctly, we came down, we double bottomed, boom, right? You can see the loss of momentum right here as well. Boom. Valid double bottom, nice RSI divergence as well. We've technically broken closed above that double bottom, which sets us up for a 2618. So for a 2618, what we're looking for is we're looking for a pullback into this double bottom zone, right? And then we're looking for a move back up. Different ways you can look for it. You look for a move back to structure. You can use Fibonacci extensions, AB equals CD. Many ways to take targets here. But that's what I'll be looking for from a short-term perspective here on the euro dollar is a potential 2618 trade. And again, if we end up violating these lows right here, then continued shorts. Let's go to pound New Zealand again. This is we're doing the short version because I don't want the live stream is going to almost run in 30 minutes already. The idea is to keep the live stream short and sweet. Pound New Zealand on 1 hour, and I'll get to your question, Zach, in a little bit. Pound New Zealand 1 hour. Let's see what we're doing here. And again, we typically I start the daily, guys. You guys know that, and work my way down. Daily is my higher time frame, but we're answering a very, very specific question here. That's why I'm starting on the hourly and not doing higher time frame analysis. But let's see. So we're running into previous structure resistance. Looking left, real quick. Sorry, just to get I did want to look at dollar Swiss. Sorry, on a range bar chart. I'm just curious. Sorry to get sidetracked, but this is what I do. That just popped into my mind. You guys know I love the range bars. Check out a range bar chart for that breakout too. We know that range bars give us different information, right? You can see our brackets right here. We have a VS1 level, actually 2 VS1 levels, 3 printed at the top. We've got 2 printed at the bottom. If you are looking for that breakout, specifically that breakout and that retest, that range bar is going to give you a much quicker signal than that minute chart. So keep an eye on the range bar for dollar Swiss. We'll keep an eye on this as well. Again, the bullish side. I mean, both sides have room. The bullish side had a lot of room for potential. But going back to pound New Zealand, and we'll watch that throughout the session today. So pound New Zealand's coming into previous structure right here. What is something we notice about this structure? And Zach, I'll get to your questions about being new to the course and stuff like that. I just want to finish up the live stream first, and then we'll kind of settle down, slow things down, and we'll kind of dig into the more educational stuff here. I like the live streams because it gives you a taste. Again, my biggest thing out there is Jason and I, we want to change the reality of trading. And that's been our goal since we started teaching, is just like we want to give realistic expectations a realistic look because there wasn't a lot out there. I'm very happy with how we've really changed the game. And I don't want to give us all credit, but I can tell you, if you look back at our timeline, I started coaching in 2012. If I don't know if you guys were around back then, if you look at how much junk was on the internet back then compared to the messages that these educators print now, it's completely different. It is now cool to talk about losses. It is now cool to talk about the hardships of trading. That stuff wasn't cool before. And man, like I used to get dragged through the mud with my message. Now, luckily I don't care, right? But I used to get dragged through the mud anytime I would say something realistic. I remember telling people like, hey, man, you could be a 40% trader and be very profitable. You shut up, Akil. You got to be 90%. No, you don't. Yeah, you do. This guy's a fraud. You could never be 40 and 50% and be profitable. Like dragged through the mud. Now you're seeing it all the time. But so we always want to keep doing that. But yeah, we have overlapping levels of structure. So we always want to be careful with overlapping levels of structure because the higher level of structure is going to be the more important one. Now you do have a little bit of room between this one, but still the higher one's going to be the more important one. So seeing how we're running into structure, I would look for a counter trend trade here. It looks like we may have a 1-to-1 measured move here. And I'll get to the questions you guys asked in a little bit. Looks like we may have a 1-to-1 measured move here. I just want to lock in on this analysis first before I lose my train of thought. Nope. Going to be too big for an AB equals CD. I don't think we're going to be at any relevant fib. We're going to be short of a 161. No, we might be right at a 1618 actually. A little bit short of a 1618. So we're not getting any Fibonacci love here. In fact, actually, I take that back. Let's try one more from this short-term move here. This little guy, when we zoom in, what we're doing is we're building, here we go, we're building a CTS score, right? So we have structure, we have AB equals CD, we have RSI overbought, excuse me. We have a 1618 Fibonacci. So we've got Fibonacci 1 point, we've got structure another point, we've got AB equals CD 2 points, that's 4. We've got RSI overbought, that's 5. You got a CTS 5 right here. CTS is the combined technical score. It's a way to quantify your trading. That way you can be consistent. I would look for counter trend trades here. I think you have a nice amount of room. Again, the only danger is that overlapping level of structure, but I think you have room from 93 even handle as well. Ooh, baby, look at that. Oh, talk to me nice. There we go. We got 93 even handle. I think we have room coming back down to our inside level of structure. This is a good one. I'm glad you brought this up. I didn't have this on my radar this morning. Yeah, we have room down to 92s, basically 93 to 92s. This is a 100 pip range here. Pound New Zealand's always been a big boy, but this is a 100 pip range for a counter trend trade. This is a really good move. So a CTS, 5? CTS 5 here. Now, here's the difference, right? New traders, listen up. Good trading opportunity. Do we sell it right away? Do we scramble to our chart trading deal and sell it? Nope, that's not what I want to do. Nope. We wait for our reason for entry. Now, if you're new, you don't have a reason for entry. So don't worry about that too much. But you wait for your reason for entry and then you execute the trade, right? There's a process. IPDE, identify, predict, decide. And the last part of that decision is what do I need to take a trade? And then once you get that thing, execute it. Obviously, make sure your risk reward is on point. There should be zero problem with risk reward in this. Again, you're going to be looking at something, we don't know the entry yet, but you're going to be looking at something that looks probably something like this. So I guess it depends on where you get filled at. You may have a risk reward issue, but yeah, decent trading opportunity. All right, thank you for that. Let me get to the questions on TradingView. Then I got to kick the live streamers out. Make sure you hit that like button again. Leave any comments if you're watching this late and you have any questions. I do go back and read them. Then I'll get to the questions here in the live trading room. Absolutely. I'll keep track of your live streams. Just joined for the first time today. Yeah, just don't watch the live streams. Go to YouTube, man. Go to YouTube. There's like 1,000 videos on there for you to watch. And go watch the free workshops over at the site as well. All the links are down at the bottom of the TradingView page. You can check it out. Hi, also first time to this channel. Thank you. Loving it. Awesome. I've actually learned many things in a few minutes. Do you have a link to your podcast? Yeah, everything is right below. I'm not supposed to share links on the TradingView live stream, but it's right below underneath here. It's called the Trading Coach Podcast. Again, if you just go to my YouTube channel, everything is there. Everything you can possibly imagine. Another quick question. Can you please give a brief outlook about the 14-day trading workshop just signed up? Oh, so that was back in August. So that's not happening anymore. I should probably remove that from the thing below. I don't really follow TradingView too much. But yeah, that was back in August. So that's not relevant right now. But we have a 14-day trial membership, so you can hop on the platform for 14 days. Awesome. Another first timer, James. Awesome. Hey, so make sure you guys join on a regular basis, guys. These are some good questions. Helps us out, allows our community to teach. Join on a regular basis. And we'll be back tomorrow, same time, same place, 7:30 a.m. New York. I demand that I see you there. All right. So kicking you guys out, live streamers. Thanks for the questions. Let's get back to the live room. And I'll answer that, and we'll dig more into the detail about the pound New Zealand and how we can actually get involved. We'll revisit euro dollar as well.